Welcome to today's financial update for October 20th, 2025. We've selected key highlights from the world of business to keep you informed and ahead of the game. Let's dive into the top stories making headlines. The silver market is experiencing a crisis with concerns rising in London. According to the Times of India, there's speculation that India might be a contributing factor. The London market has seen a tumultuous few weeks, with rising demand and limited supply pushing prices to unprecedented levels. This situation has led to a ripple effect globally, impacting investors and industries relying heavily on silver. Meanwhile, significant shifts are anticipated as Dow Jones futures are under watch with upcoming Tesla earnings and pivotal talks with China. According to Investors Business Daily, the market dynamics appear risky. The interplay between tech giant earnings and geopolitical discussions is crucial, as unpredictable variables for investors could either stabilize or further destabilize the market. The ongoing tariff debate is another area of interest. Former President Trump commented on the implications of lifting tariffs in an interview with Axios. He emphasized that removing these tariffs could lead to long-term economic challenges for the United States. The tariffs currently provide revenue and critical diplomatic leverage, reinforcing the country's strategic positions globally. Shifting focus, Jamie Dimon, CEO of J.P. Morgan, has issued stern warnings concerning potential bankruptcies in the auto industry. The Street reports that Dimon is concerned about the broader implications of these failures on corporate lending and credit markets. The recent bankruptcies serve as a significant cautionary tale for sectors reliant on large-scale financing. Over in Dubai, food trends have taken a center stage, with unique offerings like matcha and quinoa-infused chocolate capturing consumer interest. However, as DW explores, these trends also reveal a darker side. The surge in demand is raising ethical concerns about sourcing and the impact on local economies. In the realm of technology and finance, resistance is brewing against artificial intelligence. Axios highlights that workers, students, and creatives are increasingly skeptical about AI's integration into their industries. Concerns range from environmental impacts to a strong preference for handmade and human-centered efforts over machine-led processes. From a global perspective, Bloomberg.com reports on China's recent restrictions on rare earth exports, which has significant implications for stock traders. These minerals are crucial for tech and manufacturing, and traders are advised to adapt quickly to the shifting supply dynamics as it could recalibrate global supply chains. Transitioning to personal finance, a troubling report from the Wall Street Journal reveals a situation where an individual's 401k contributions disappeared, leaving her without answers from her employer. This highlights the importance of transparency and security in retirement planning, reminding us to be vigilant about our financial statements. On the investment front, TipRanks brings attention to Piper Sandler's focus on dividend stocks with yields as high as 13%. These investment opportunities could present substantial returns for those seeking income in volatile market conditions. Finally, we touch upon a tech-related issue where Google's recent announcement has significant privacy implications for Chrome users. According to Forbes, the confirmation of a privacy vulnerability affects all 3 billion users, marking this as a critical concern for digital security. To wrap things up, Bloomberg.com relays news of a major legal move as a Singapore law firm gears up to sue Switzerland over losses related to AT1 bonds. This could set a historic precedent with potential ramifications for international financial regulations. That's all for today's financial update. Stay informed, stay ahead, and remember, Navigating the world of finance requires both vigilance and insight. Thank you for joining us, and we'll be back soon with more updates to keep you on the leading edge of the financial world. Have a great day.